Sometimes they are giving you two cash flows to make you confused. So remember that one. This is the extra information. Now the third one is transfer, international transfers. So international transfer payments are also a part of our current account. So let's just talk about that. The US provides aid to Costa Rica in response to flood in Costa Rica. US provides aid, which means sends money to the Costa Rica. US perspective, outflow. Switzerland provides grant to US scientists to work on cancer research. Switzerland is providing money to US inflow. So now you have the idea that which transaction will go under which account. If this is buying and selling like normal business goods, raw materials purchasing from that country or selling goods to other countries, that is the trade transaction. If there is income on the financial assets, right? For example, you purchase stocks and bonds from other countries, companies, then it is under international income transaction. And the last one is international transfer, which is mostly for unforeseeable events or some in kind of like gifts or something, aids. So you already know that how these are going to be treated, whether inflow or outflow. The trick is you need to mark yourself where you are, which perspective you are talking about, which position you are explaining the inflow or outflow, right? Now, let's talk about how the summary of a current account is going to be presented. So recall your discussion in macroeconomics in which GDP is going to be presented, right? So this is same like that. So this is the summary of the accounts are presented over there in different format here. So US exports of merchandise. So this is the amount. Amount is always in billions. This is mentioned here. And this is the real data from 2010. $1045 billion US export of services, US income receipts. So now you understand what is going to be, what is meant by services, what is meant by the income receipts. Income receipts means either you are receiving interest or dividend. And then you minus it, all the cash outflow in the form of imports, import of services, and payments, income payments. Either you are paying interest, they're going to be negative, you are paying interest or dividend, right? And the last one is, so this is the balance of trade, which is exports minus imports, right? Balance of trade. The last one is net transfer by the United States in the form of like aids or something. It's 130 billion. So current account balance going to be 4 minus 8 minus 9, which means the trade balance minus the net transfer income account is going to be 419, right? So let's just move forward with the capital and financial account. So what we have learned, giving you a summary here. So we talked about here international transfers. This was the guys, can you see the whiteboard here?
Yes.
Where it goes, I don't see. Yeah, now I can see. sector payments. There is international transaction. This is international transaction. International transaction. Now we are talking about the capital account. So what is under the capital account? Back to our PPT. Here, direct foreign investment. Direct foreign investment. So investment in fixed assets in the foreign countries, which means you directly acquire other countries' companies, right? Or you establish your own company over there. Like you purchase land, you build building, and then you hire people, and then production process starts. Or you just purchase the already selling company in other countries, in foreign countries. Number two, portfolio investment. So when you directly purchase the shares or the bonds of the companies through stock exchange. So transaction involving long-term financial assets such as stocks and bonds between countries that do not affect the transfer of control. So if you directly invest in stock market, please forgive about my writing here. Portfolio, and we call this portfolio investment. So here, what is transfer of control? In some countries, they banned that foreign investors invest in the stock exchange. Like some years ago, China banned foreign investors to invest in Chinese companies. They cannot purchase Chinese company stock. So if there is no transfer of control, then if foreign investor purchase the home countries or local countries, stocks and bonds, we call this international portfolio investment, and it is recorded in capital account, capital and financial account. Other capital account. So remember, in this case, did you notice something? Direct foreign investment is also, its life is more than 1 year. Portfolio investment, you are holding stocks and bonds whose value is, or whose life is more than 1 year, right? So your money going to be, your intention is that the money is going to be stuck over there for more than 1 year. But in other capital investment, see, transactions involving short-term financial assets such as money market securities between countries. So remember, this is a special case in which less than 1 year amount of instruments are recorded under the capital and financial account, and that is just one exception, that is for money market securities, and that is between government to government, not between companies to companies. Companies to companies or investor to companies, it is called bonds, right? When the money market securities are going to be exchanged from one country to another countries, or then we call this is other capital investments, right? If you buy government securities less than 1 year, right? Not companies securities. And of course, there is going to be errors and omissions. Sometimes, we make errors going to be adjusted here, or you forgot to record something, we include here, right? Now, question is, we talked about that any kind of transaction that is between one country to another country is going to be recorded either into current account either into capital account. And this current account, we talk about that normally, sale and purchase occurred, income factors, like you receive dividend or pay interest. Third is the aid, transfers of aid, gifts, this kind of stuff, right? And in capital account, you talk about the direct investment, the portfolio investment, other capital investments, right? What happens if I smuggle goods from one country to another country? Whether it would be recorded here or not. This is a question and answer session, a fruitful thought for you guys. If we import stuff without letting the government know, we don't pay taxes, and we are selling, of course, nobody's giving you for free. For example, I bought a car from China, and I bought it and I called my company to import it for me here, but I don't pay taxes. I don't, I conceal this, and no government official know that I don't pay any taxes, but I paid to the Chinese person. Would it be recorded here?
No.
There's two countries involved. I paid money for China for that car in yuan. I imported here through different means, but I don't pay taxes. I concealed it. Nobody knows about that. I am using that car here in my country. Whether this transaction is going to be involved here, recorded here. First of all, this is international transaction. Yes, because I paid in yuan. So it should be recorded here. Sorry, it would be recorded here or not? EGA, TD, Oliver, Lancelot.
I think you did because you did an international transaction. So you pay.
No, because you didn't pay the taxes. Okay, Dion, you said that. Yes, Oliver, what's your answer?
I think so, yes. I mean, if you do an international transaction, it is with your bank, it is written down.
Okay. Okay, let's talk about the answer here. So I received 2 chat messages, not cash. Yes, if it's online, no cash. Okay. Remember, all the international transactions that happen, number one priority must be that it's automatically, we assume that it should be legal. Right? So you are importing a car from China, but you are concealing the fact that this is under smuggling, and smuggling is illegal. Similarly, you are buying guns, smuggling guns, but you are paying in other countries money, but it is illegal.